Aloha, hey, it's Julie Ziemelis, 365 Hawaii with Eric Ziemelis, 365 Hawaii, and we are with Real Broker, and this is the mortgage show with Joe Eagan from Wynn and Eagan Team. And Joe usually is in our TTTs, which we do once a month, but this was an important one that we wanted to give him to himself because the mortgage rates are changing, and we want to give you guys top-notch information. We're going to talk about where the rates are now. We're basically say what's the future look like, and then we're going to talk about strategies. So we're going to give this to Joe, and Joe's going to first talk about what's going on with the rates. So
Yeah, so I kind of reached out to Julie and asked her to kind of do this on my own because I feel with media, social media, things like that, you hear a lot of things that are going on, right? And at the hard part is at the beginning of these, when we would start to do the Thursday talks, my hopes was that my part in it would be more enjoyable, meaning I would have good news, right? However, interest rates right now currently sit at about 7.375%, which is a bump from the last time we did the last month Thursday update, which they were kind of hovering around high sixes, now bumped up to 7.375%. Thinking is when I first came into the year, we were thinking that the Fed was going to cut the rates about 5 times throughout their meetings through 2024. Then it kind of wavered to 3 rate cuts for 2024. And now the anticipation is they may not cut at all. And if they do cut at all, they're going to be cutting in December towards the end of the year. The reason for that is inflation numbers. The Fed is hard set on getting to a 2% inflation number target, right? Last inflation number came out, they were expecting inflation to be about 3.2. It actually rose to 3.5%, which kind of put a little bit of fear in the market and a little bit of fear in the Fed and say, wait a minute, we may need to have interest rates higher for longer, right? So unfortunately, interest rates kind of are the biggest topic right now, but it's not the end all be all in real estate, right? There's still timing in the market. There's still a good time to buy. Obviously, we have to make sure that it's affordable for everybody, but I wanted to hop on here just to kind of see, and I know you guys have some additional questions for me, but just touch on where rates are now.
there we go. Okay, so what we've been hearing from people in the field is as we were kept talking about those five, the 5-tier breakdown, and now it's not going to be into December. Are you willing to step forward with any idea for how's it going to look? How far will it go down? Maybe have you heard anything about in terms of we'll get back into sixes? Is that all we're going to expect for the whole year? What's the story?
Yeah, so what's hard is what's funny is if you look at it, rates went up, right, over the last week. Although the Fed hasn't done a single thing with the interest rate, with their rate, right? What happens with mortgage rates, it's all in anticipation of what the Fed may do. So we saw a decrease in rates, in mortgage rates, because we were anticipating 3 to 5 Fed rate cuts this year, right? Now, when the Fed cuts their rate, right now it's at 5.25% to 5.5%. That's the Fed fund rate. So that is the percentage that banks lend to other banks, right? So typically when they're going to cut the rate, the anticipation is it's going to be by 0.25%, which then will bring typically rates down into just one rate decrease will bring rates down back into the high sixes.
Mm-hmm. Okay, so people need to lose their jobs and need to stop spending money. What do you think is going to affect the Fed to think that this is a better market to lower the rates with?
I still think there's going to have to be something other than just the Fed target of 2% inflation. Something else economically has to happen. The easiest and biggest thing for me is unemployment, right?
Mm-hmm.
We start to see major unemployment. Unemployment comes out tomorrow. They're anticipating $214,000 or 214,000 unemployment claims to come in.
Yeah.
What's ironic is the last 7 unemployment numbers, not factoring in any weeks that had a holiday, they all came in at 212,000. That's pretty tricky and pretty odd that they all came in at the same number.
Okay.
And unfortunately, the market is reacting and people trade upon these numbers, right?
Right.
And
Right.
they're starting to question kind of the backing of these numbers that the BLS puts out and people trade upon.
Hmm.
So I do think, and we also have to look into the commercial space, right?
Hmm.
Commercial lending and commercial real estate is really taking a hit right now, although it doesn't get as much play as I think it should.
Yeah.
So between unemployment and kind of what's going on in the commercial space, I think there's going to be more that we're just not seeing now.
Okay. Okay. Which is interesting because, nobody really wants to see basically an economic downturn so they can afford a home, but it's almost has to play like that. So you were basically saying, with the rates being where they're at, it's actually kind of healthy for the market, right?
I actually think it's a good thing, right? I wanted to see higher rates for longer just because of that affordability piece. The Fed's funds rate couldn't stay at 0%. That's not sustainable, right? We all
Right.
knew that it had to increase. Typically, the Fed funds rate will average about 1.5 to 2.5%. That's typically historically pre-pandemic where it averaged, right? Now, again, it's at 5.25 to 5.5. That's not sustainable either.
Mhm.
And we all know that needs to come down a little bit.
Mhm.
But I do think having it higher for longer creates opportunities, right? I think as long as you can afford it and we can get a game plan on what you can do to purchase a home, I do believe now is a great time to purchase, right? Because we need to see a little bit more inventory and that will help. Usually the spring season kind of brings on more inventory, but I think there's more negotiating power than ever,
Mhm.
right? Or just over the past 5 years. So I do think now's still a good time to buy because again, we all know once interest rates decrease by 1%, it's going to bring in a flood of buyers. And we just don't have the supply of homes to be able to keep up with that, right? So home prices are going to increase. They just will. More demand, not enough supply, it's going to drive prices up.
Mhm.
So I do think it's a good time to buy now.
Okay.
So we see
So,
we see a little bit more inventory coming on the market, which is also
Yeah.
able to people to have a little more choices, right? And not have to jump into something so quickly. Instead of, making that decision in one day, you might be able to wait a few weeks to figure out whether it's going to work or not.
Yeah.
yeah,
And
or
kind of what
months.
we were talking about before this phone call, right? Is so I do financial reviews for everybody that has purchased with me.
Mhm.
Typically we do it at 6 months and a year, right? So what I did is I kind of looked back at a couple people that purchased that we even worked with together, right? That purchased last year when interest rates were still high. So what I found is, home values in Hawaii are still increasing about 11.5% average, kind of speaking, right? But what I did is I looked back at a couple people that purchased. We had one borrower that purchased back in June of 2023 for 1.75 million. Just looking at home values pretty quickly on Redfin, Zillow, just kind of tools we all have access to. His home is now worth 1.88 million. Now that's $138,000 in less than a year,
Mhm.
right? We have another one that we worked together, purchased in October of 2023 for 865. Just looking online, his home's worth 916,300. Now, they paid a higher interest rate when they purchased. They did, right? The one back in October, that was kind of the peak of where interest rates were. They were kind of nearing 8% at that time point. Now, was it a bad time for him to purchase a home? I guarantee if you can make $51,000 in appreciation in a short period of time, who would say no to that?
Right.
Right?
Right.
You're going to pay a mortgage, whether you're going to pay your mortgage or your landlord's mortgage, you're going to be paying a housing expense unless you live with family, right? And I get that.
Mhm.
So, the
But you know
biggest
what though,
tool is
when
appreciate.
the gentleman that bought his house at 8%, um, he was retiring and his site had been on Hawaii for a long time. And if he was sitting in Santa Cruz a year later, he still wouldn't be living in Hawaii. And so
Sure.
not only did he get the appreciation, he got the lifestyle choice that he wanted and he was ready to do it. So when you talk about buying is also predicated on, is it your time in life to do something different?
Timing too, because a lot of
Yeah.
people, it's particularly coming here to Hawaii, is that if you wait too long, then you're almost missing the boat at that point. And some people are starting to get older and older, and it gets harder and harder. So you know what I mean? If you have to wait an extra couple of years to move over here, that might not be a good strategy either.
Right,
Right.
right. And
Yeah.
the cost of waiting. I mean, now people thought in January they were going to wait. Oh, well, wait until
Mhm.
June when the prices, I mean, when the interest rates drop. Well, now they're not really going to drop in June. Now you've put
Yeah.
6 months of your life on hold, right? So,
Right.
yeah. In fact, that was a question that we were going to ask you is that, if you were a betting man, is 2025 even going to be, because everyone's like, oh, stay alive till 2025. Well, I mean, are we all now saying that you can't guess on what's going to happen in the future at this point? We really can
Really
we?
can't.
We
You can't, right? We talked about this earlier. I'm done telling people interest rates are going to decrease because I have no idea when they are. I know they will, right? In time. Everything's kind of cyclical.
Mhm.
But the whole marry the home, date the rate, you still got to be able to afford the mortgage period. And I want to make sure people can afford it, right?
Yeah.
That's the biggest thing. And there's different strategies that we can do in order to help you afford a home now with higher interest rates and home values not decreasing, right?
Mhm.
But I can't predict what's going to happen in the future. I'm done trying.
Yeah.
I listen because people do. You find out, oh, we're in real estate or I do mortgages. When are interest rates going to go down? That's typically the first question I get when somebody realizes that I do mortgages.
Yeah.
And I've always been pretty confident. This is what the May 10th, 2023, this is when they're going to go down. That didn't happen, right? Well, we're going to get 5 Fed rate cuts in 2024. It's going to be a better year. That doesn't look like it's going to happen.
Yeah.
So we just got to deal with the cards that were dealt.
Hmm.
And
Well, go ahead.
go ahead.
Sorry.
No, go ahead.
So we have a lot of people that are, they're on the sidelines getting ready and trying to figure it out. But it also sounds like that it might be a time to sort of kind of review where you're at personally for the loan, because, it might take you 6 months or a year to get everything straightened out if you're a credit to get everything ready. And I think a lot of people don't have an idea where they stand credit wise. And so it might be good to get a sort of a checkup of where you can go and what can happen with that.
Totally. And that's why, honestly, I enjoy what I do, right? For the sole purpose of helping people. I don't love giving people debt, right? I'm giving them a mortgage. I love to help people structure a financial picture that's going to make them successful long term. I do believe a home is going to help significantly build wealth for people. I
Hmm.
truly believe that, right? So to answer your question, I always say for some reason, people don't want to reach out to a lender for fear of the unknown, for I don't want to have my credit ran. Now, what I tell people is there's no harm in reaching out sooner so that we can get an accurate game plan. A lot of people think their credit score is one thing and it's not. There's 9 different scoring models. What they see is going to be different than what I see. There's different things that we can be doing with paying off debt, building savings that I can help you do to make you a successful homeowner, which then will help you build wealth, right?
There you go. And then also, we had that chat. I like your strategy of when you're able to come into a softer market like what we're having, and you have an opportunity to have a discussion about how you want to structure trying to buy a house. You had some strategies also about doing seller concessions. Talk to us a little bit about that.
Yeah, so I tell every agent that I'm working with, before you think about, let's say a home's listed for 500,000, just for round numbers, don't laugh at me when I say that number, right?
That gives you a condo.
Exactly. But let's say it's listed for 500, they think, and every buyer goes, I want to get a deal and let's offer 480, right? I always say before you reduce a price, let's always ask for seller concessions, right? So there's 2 things you need when you purchase a home. There's down payment, there's closing cost. Now, if we can help and get the seller to pay closing cost, we can either buy down the rate with that closing cost. To me, cash is king, right? I'd rather reserve cash. A home is for the hardest place for me to put my money in order to get it back out. I either need to sell it or refinance to realize my money back out.
Mhm.
If we could ask the seller to pay closing costs, reserve some of my cash, and I can invest it somewhere else and earn more with my money somewhere else, then I'm going to do that, right?
Mhm.
I can also, there's things now called a temporary buy down, where you can ask the seller to actually subsidize your payment for either a 2-year or 3-year period of time to get essentially a lower rate. So there's different things that we could be doing to utilize instead of, if you lower the price by $10,000, that's going to save you on a monthly payment of about $60 a month. It doesn't really have much bang for its buck, to where if I can reserve my cash and invest it somewhere else and earn more with my money, I'm going to do that. Or if I'm going to pay off higher interest debt, it's going to have far more bang for its buck to pay off higher interest debt
Mhm.
than it would be to use it to go towards closing cost.
Yeah, that's such a great idea. Yeah, we have a woman who's trying to sell her condo, and we're like, oh, maybe we should bring the price down, and maybe another opportunity for us is to say, let's pay closing costs, and that way that will bring in like a buyer who could say, I'd rather do that. So that's actually a pretty good strategy too. And then in terms of like if people are trying to think about let's say like next year, I think we're all kind of saying is that the price of housing is not supposed to rise at the level it has been rising over the last 4 years, right? So in the sense that if the prices are still going like 3 or 4%, at least people aren't fighting with each other to try and raise those prices. But when you were talking about when the rates do drop, it does bring in a bunch of people, right? And then you start to do the fighting for the thing. So in the sense of getting yourself in a position to buy now, this is what your goal is. Now is a good time, right? Especially with everyone now, like especially here in Hawaii. The list to sales price ratio is like at 97%, and in some places it's 92. So we like to say there's the housing's on sale.
Right.
So yeah, so I'd say that if they get with you and they say, let's just get a plan going, right? And then get in and maybe ask for the seller concessions, there could be some win-win here.
Totally. Yeah. I
Yeah,
mean, again, we want to make sure we get it affordable for people, but and we can help do that, right? So go ahead, Eric.
I was thinking about also some people have been talking about a kind of a step up idea where like they come in with a condo. I mean, they might not be able to get their dream house is the big house with the view and everything like that. But maybe they can't do that. Maybe come in with a condo to kind of get your foot in the door. But at least you're as the saying goes, you're where the boats all float at the same time. So at least you're going up at the same time. So you're not starting from you haven't missed it yet. Also, so might be we've heard some strategies of that as well.
Yeah.
That's
Fix
a great
it
point.
and then sell it again, maybe in a couple 3 years. And then between all of us, to trying to like move up from a house to house, what's like the time that before, enough that you have a little bit of equity in the house because of closing costs and stuff. How long should you hold a house for to really make it so that you're just,
It really depends, right? If you had it during COVID, your house just exploded in a year.
No, I'm talking about getting in now.
Right? Yeah, right. But typically, like you alluded to, the home value is increasing 50%. That's not sustainable.
Yeah.
If it is, then we should all purchase real estate right away, right?
It's too late.
Typically, right. Yeah. Typically it's going to increase 4 to 8%. That's more historically average, right?
4%, right. Yeah.
Yeah. So if that's the case, right. And for tax ramifications too, typically everybody from what I hear says 2 years.
2 years. Okay. Because I have I have a woman that's trying to think about moving. She bought a 2-bedroom, 2-bath, and she actually wants to move down so she can reserve equity. And then Eric pointed out to her that you've got capital gains too, because she did buy a few years ago. And so it's like all that stuff. So that's what you are good for, right? That people can call you and run these numbers with and figure out what's the best strategy, because that's what you do for a living, correct?
Absolutely. Yeah. Even instead of move up, we don't take that appreciation. We rent that home out to possibly save, right, for the next down payment. If you purchase another property, you don't have to put 20% down. You can get in as little as 5% down with a conventional loan if you're moving up and you already own a home. So that's typically what people do to build wealth through real estate. They'll kind of start at one point and then, okay, so I'm going to live in it for 2 years, then rent it out. pay that mortgage, and then I'm going to move up, right? And they have a savings plan throughout that 2 years. I'm still in touch with people that we talk on a regular basis, just in regards to kind of that savings to help build that real estate portfolio.
Yeah, that's especially as we get older. It's so it just one day you wake up and all of a sudden you're like, oh wow, I can afford, because we have some people coming to the island. They slowly bought 5 different properties in Oklahoma. And Oklahoma, you're like, but they had enough of a thing that now it's going to completely fund their retirement in Hawaii, just from passive.
Right.
So
That's great.
and talking to somebody who knows how to play with all that is just invaluable for, how to make things work. Because now we're actually getting people saying, how can I afford to retire in Hawaii? And so having those conversations now to get an idea of what the future looks like, that's fantastic. And then Eric, did you have any other questions for Joe on this one?
No, I was gonna comment that it's interesting that you have the fact that, hold on, I lost my train of thought there for just a second.
Sorry, I didn't mean to put you on the spot there, buddy.
So no, it was the idea that there's equity versus trying to earn the money. In other words, you've got a rental, okay, and that's making money. Is a lot easier than you trying to go out and have a job and make the money. I mean, it takes so much time and energy. And if you could have a job and have something making money on the side, that's where your retirement gets a lot easier.
Right. I mean, that's financial freedom, right? At that point, you work because you want to, but you have these assets that are giving you income every month. So you don't have to, that's financial freedom. Yeah.
And that's the goal, I think, in life: happiness and financial freedom.
Yeah. Well, especially now when your milk is costing you $8. If you have to earn every $8 for it, it's going to be a little bit irritating. You probably don't want to drink milk anymore at that point. Right?
Right.
Yeah. Hey, and also, if I could throw this in, because I just talked to a gentleman that works in the planning department for the state of the county of Hawaii. They are probably most likely going to pass a bill that allows people to build ADU units in the back of their homes. So that way they have passive income coming in from their own home. So I would suggest also, and talking to you too, about how that all works out with taxes and stuff, but trying to find a home that actually hits the parameters of building the ADU, because he was just telling me that not all houses are going to be able to do that. There's going to be certain little, and look for that now, because then you buy that now, you get up the ADU, and then you just increase the value of that house exponentially because you built a rental unit in the back of your house. Yeah, and so, and it's also, since it's not investment property yet, you don't have to put 20-30% down. You're basically buying a single home that actually has a little bit of land that you can actually put, a secondary unit on it. So I just wanted
that's great.
You just told me that's going to happen. That's going to help.
I wonder how they would distinguish who could do it versus who can't.
Well, 2 of the things that they want to make sure is that you have enough water. So you have to be able to tap into a water source. And so on the other side of the island, that can just be a catchment tank. But here in Hawaii, they want to make sure that I was asking him questions, and he's like, "Oh, you really need to interview someone from the water department." I'm like, "Maybe I will," because I don't know who. In fact, Eric and I were even discussing where the heck does our water come from? Some of these people are sitting on wells, some of them are sitting on these big tanks, some of them on, it's different places, and that would be a very, very valuable map in West Hawaii, specifically to figure out which pieces of property are going to be able to have the extra water credits. Right. And the other one too is if you have a house that's already sitting on a cesspool, you have to change it to a septic, so that way that it's not leaking into the groundwater, and you can build a septic tank big enough to handle the load of actually a person in the back of the house. So those are basically the 2 things: wastewater and fresh water. Yeah, that's great. If you can just build passive income in your backyard, it's a good day.
Right. So innovative strategies to get through life. That's where we're at.
You have to have innovative strategies to get through life. Life is getting more expensive all the time. I mean, we were just talking about the insurance issues that are happening now with house insurance going up and car insurance going up, and being able to mitigate future risks for finances too, is figuring out, okay, if it's going up this much now, what is climate change going to do for the future? Sure. So yeah. In fact, I would tell anybody, if you're living in a place like a high wildfire risk or something like that, to start looking at your home insurance policy. And then, maybe, keeping that in mind as well. So, because, Eric and I were talking about the fact that the condo complex is right next to the ocean. They all need to get some help. They've been sitting next to those ocean, since 1970 something. So, we can work with people on learning about more of the newer complexes who will have less opportunities for assessments. So that way you don't get hit with something you're not expecting in your
Sure. Plus, it's harder to get financing on those, right? With deferred maintenance, and that's an HOA issue, in my opinion. But
it is. So the guy we talked to, this insurance commissioner guy came down and talked to us too about the fact that a lot of the condos across the entire state of Hawaii are underinsured.
Sure.
And so, yeah. So they're going to make them do some things like,
the question for this on the lending side, do you think they're going to tighten up on a lot of different areas and what they lend to now as well? I mean, I haven't
heard anything in regards to that. It's funny because when things happen, it kind of triggers down to lending ultimately, right? So when that the condo complex fell in, I think it was Miami, then that's what triggered all of this and said, wait a minute, all of these kind of have some deferred maintenance that we want to protect our collateral, right? In order to be able to lend on it, we got to make sure that we have something to take back, heaven forbid if something happens. But I haven't heard anything of tightening lending in certain areas that I don't know how you would do that just from kind of certain, targeting issues, right? So I don't know. I haven't heard anything in regards to that though.
Keep your eyes open though, because in Hawaii, the two things that really got the whole thing going was they had called thing called Marco Polo fire in Honolulu. It was a high rise, and the top 5 floors basically were burned out. They didn't have sprinklers in the system in the condo. So now there's new state law that you have to put sprinklers in all of these condo apartments, right? And then also because of the age of the stock, they're worried that they could collapse. And then the wildfire in Lahaina, where a couple of condo complexes were completely wiped out, and trying to rebuild that and what the cost is to rebuild that stuff. Then they started looking at what the cost to rebuild it is, and then they all started realizing these are millions and millions of dollars now. These aren't what they were even 7 years ago. Maui's like exploded, and now they're going, okay, who else can we get the money from to pay for all of this? And that's kind of where this is coming from. So
sure. And the hard part is, like you said, they're underinsured.
They are injured. And also with HOAs, if anyone's still like watching this stuff, is making sure that you look at the how healthy the HOA is before you buy a condo, right? So, and do you guys see that? That's an interesting question. As a lender, do you obviously want to see that the condo that you're helping get a loan on is actually viable with HOA?
100%. Like if you heard of the term non-warrantable condos, that means something's wrong with the HOA, right? So we look at everything in regards to, we have an HOA certification questionnaire. It's 3 pages where we ask them everything. Most have it on hand, right? But we look at their budget, we look at the reserves, we look at how many people are delinquent, we look at is there any deferred maintenance? Because yes, the banks essentially what they want to do is protect their collateral, right? So if we're going to lend in a certain complex, we got to make sure that the HOA is doing the appropriate things based upon Fannie Mae and Freddie Mac guidelines in order to lend in there. So yes, we do a full condo review.
We have a few condos here that do not qualify for that, for that reason. And the other one that seems to come up recently has been the this idea of deferred maintenance. That there's in other words, is it only structural, or is it just, it could be a lot of different things, right? It's not only
typically what we care about is just structural. There's a lot of things with deferred maintenance, but typically from a lending standpoint, we just care about anything structural.
Okay. Making sure that the salt water isn't eating the interior rebar for collapsing. And that's another thing too, that they said that at least in our island, we don't have 15, 25 foot, complexes. Ours are like 3 stories. So at least we don't have the level of it just seems like almost overwhelming and unimaginable trying to fix all of that on those condos.
Yeah, 23 floors is difficult.
Yeah. But that's why you hire an HOA management company, right?
That's the way you're supposed to.
That's why you pay an HOA due, and that's why you hire somebody to manage. It's a lot more than just making sure the structure's clean and who's doing trash and water. It's a lot more than that. you know?
Yeah.
So that's why you need to make sure, and especially when you're purchasing in a condo community, because you're purchasing with a couple hundred other people typically, right? Dependent the size, but you have to make sure that the HOA is doing the appropriate things, because that could help or hurt your resale value, right?
Exactly.
So, so yeah.
Yes. Well, that's good. Good information. We should actually even do maybe a video in the future about, like, the whole, keeping, making sure that, and again, I think people should be smart and they should actually go sit on their own board of their HOA so they can keep track of what the hell's going on. So,
I agree.
yeah.
You know where
So,
your money's going.
yeah, right, exactly. So, okay, so we are going to see you again when we meet again on I think we're going to try and do it on the 23rd. But
Okay.
if you're watching this on YouTube, if you have questions that you want to address to Joe directly, I'm putting his contact information in the information below. Also, you can catch him. Give him your email address real quick.
So it's joe@wynnteam.com. So just Wynn is WYNN team.com. So joe@wynnteam.com.
There you go. And he has helped many of our clients, and we totally recommend his expertise and the work he does to close our deals. He's closed every single one of them. And so that's valuable. It is.
Right.
So, okay.
Well, I could wait. Well, before you do, let me interject give Joe a little more of a plug here for just a second.
Okay.
Is that one thing about being here in Hawaii is that it's tricky. There's a lot of nuances to get through the system. And if you haven't been through it before, you get caught up on a lot of things that a lot of lenders have trouble getting things done on the right timeline and actually getting the job done. And luckily, Joe's got it all under control. So it makes it a lot smoother, because you hate to be in the middle of a deal and having to worry about whether your loan's going to go through or not close, a week before the end or 5 days before you have to get there. So it's if you've done it, all the things, it does make a big difference.
Right.
Yes, it does.
Plus, honestly, with interest rates increasing, the time has kind of shrunk a little bit. I always say there is such a thing as island time, right? And the good thing is, with appraisers kind of not being as busy, it's kind of shrunk the time frame. I think the last couple of loans that I've closed in Hawaii, we closed in 21 days.
Oh, really?
So it's
there you go.
Pretty, versus the very typical 45 days, which that's pretty typical in Hawaii. So yeah.
Interesting. That's a good one to know, because some people they want to get over here sooner than later. Okay, that's a good one to know. So if things change, like if all of a sudden the interest rates drop exponentially, we'll pop you back on here for an update.
Right.
But for the most
I'm
part,
coming back on if they cut. They're meeting May 1st. I don't think it's going to happen, but if they do, we will hop on May 1st.
There you go. Because I know that you just love bringing your shield of eggs being thrown at you. So
I know. Yeah.
Well, thank you very much, and we totally appreciate your expertise in helping our people.
Oh, you're welcome.
All right.
Thank you. Okay, we'll see you in a month. No, actually, 2 or 3 weeks. We'll get you out there, and I'll tell people what to look for you. Thank you.